Hi, good day all. So welcome to Phillip Trading Podcast. So my name is James, Marketing Executive for Phillip Futures. Okay, so today we will have my colleague Trent with us. So how are you being, Trent?
Yeah, I'm feeling good today. Nice to
I
be
thank
back.
you. Okay, great. Okay, so last week actually we discussed about how to create a trading plan for US indices, and it's very good that today's our topic is how to invest in US growth stocks. So both of the topic actually got a little bit of related. Okay, so if let's say you miss out our previous trading podcast, you may go to our Facebook page. Okay, to subscribe our Facebook page and watch it back. Correct. So first questions for you, Trent. How to invest, what are the main reasons actually that had caused the recent rise in the prices of the stock on US indices?
Okay, actually, there are two main reasons for the recent rally at record highs for the S&P 500 and the Dow Jones index. So basically, the first one is mainly due to the round of strong economic data, which has buoyed investor optimism for the economic reopening. So last week, if I'm not mistaken, there was a data on ISM survey for March showed that a measure of US services industry activity actually jumped to a record high. Then the following data on Friday report shows that the US non-farm payrolls actually surged by 916,000 jobs in March, so beating the consensus forecast. Then the second reason is actually the additional government stimulus which has helped the S&P 500 and Dow Jones to clinch all-time high. So basically, the President Biden will be introducing a USD 3 trillion to 4 trillion package that will target traditional projects like roads and bridges alongside investment in the electric vehicle market. So with all the good news flowing through the market, most investors are currently quite optimistic and hence the market continue to rally further.
I see. Yeah. I believe that the stimulus package able to spur the market up. Okay, so based on your our opinions, will the indices continue to go higher, and why do you think so?
Okay, so based on my opinion, right, there is more room for further upside in the US indices. As we all are aware that the month of April is the corporate earnings season in US for the first quarter, right? I'm expecting some good numbers from the major companies, especially in the consumers, technology, and energy sectors. These sectors are the main beneficiaries of the reopening of the US economy. Also, as mentioned earlier, the strong US economic data is an early indication that most of the major companies had performed relatively well in first quarter of 2021. So from my point of view, the next reason for S&P 500 is most likely located at the 4,100 whole number level, while the Dow Jones is at the 15,500 whole number level.
So regarding to all these recovery stage also activities are occurring in US. So which company or sectors that would you recommend or advise investor to look for?
Okay, so in the current environment of which the US economy is recovering and previous growth is beginning to resume as well. So investors should actually seek to invest in US growth stocks. So basically growth stocks are companies that increase their revenue and earnings at a faster rate than the average business in their industry or the market as a whole. Often a growth company has a developed and innovative product or service that is gaining share in existing markets, entering new markets, or even creating entirely new industry. Unlike value stocks, high growth stocks tend to be more expensive than the average stock in terms of metrics like price to earning ratio, price to sales ratio, price to free cash flow ratios. Nonetheless, right, despite their premium price tag, the best growth stocks can deliver fortune-creating returns to investors as they fulfill their awesome growth potential. Okay, so to find great growth stocks, right, investors need to look for basically three criteria. First is to identify powerful long-term market trends and the company's best position to profit from them. So for example, right, in the e-commerce companies, in the e-commerce sector, companies like Alibaba and JD.com are well positioned to profit within China and international markets as more people shop online. Okay. Then secondly is to find businesses with strong competitive advantage. Facebook is a prime example here. Each person who joins its social media platform makes it more valuable to other members. So it creates a network effect of Facebook, which can be difficult for new entrants to displace the Facebook as the current market share leader. And also Facebook have more than 2.5 million users, which certainly make it unlikely that a new social media company will displace it. Then last is the third criteria will be to seek companies with large addressable market. So Amazon is a great example for a company with large addressable market, as it has a massive global fulfillment network and are well positioned to profit within the US and international market. So to sum up everything, investors should always look for these three criteria to invest in growth stocks.
Okay, thanks for the sharing, Trent. I believe that just now you mentioned about those companies are quite big in their market cap. Okay, so what are the potential risks that investor should focus on? Yeah.
Okay, so based on the recent current flow of news, right? There's actually I identify one potential risk to the market that investors should be aware of. If not mistaken, the European Medicines Agency said that it have found a possible link between AstraZeneca's coronavirus vaccine and reports of very rare cases of blood clots in people who have received the shot. So there are safety concerns which prompted the EU countries in recent weeks to suspend the use of the AstraZeneca vaccine. Nonetheless, WHO, World Health Organization, say that there's no definitive evidence as of now, and it is not clear whether or why AstraZeneca's vaccine will cause a problem not shared by other vaccines that target a similar part of the coronavirus. Okay, so other than that, investors should also be wary for any potential correction, as most technical indicators of the US indices are currently showing overbought levels. However, when the market drops, the potential correction would be a great opportunity for investors to buy at low and accumulate long positions in the US stocks market.
Yeah, thank you, Trent. Yeah, so talk about the coronavirus, right? So we also hope that the coronavirus will go away very soon, faster. Okay. Yeah. So thanks for the sharing, Trent. So we call it a day, and thanks for watching our podcast and support us all the while. Okay. So those who haven't subscribed our Facebook page and also YouTube channel, do subscribe now. Okay, to follow, to stay closer with the market with us. Okay. Yeah. So thanks for the time, Trent.
Okay, thank you.
Hey, thank you. See you.
Bye-bye.